Kranthi, good morning. Thank you for your time this Monday morning. Explain to us, what do we make of stocks like Reliance Industries despite a handsome growth in profit as well as revenue announced on Friday? We are seeing the stock is down about 2.25% in trade. Mostly it seems stemming from fears around a ban or a sanction on the ceiling by the European Union as far as its import of Russian oil and export to the EU is concerned. Explain that to us.
Yeah, Karthik. Last couple of years have been a good time for India. We have been importing the Russian oil, and it has been refined in Indian refineries, especially like the Reliance and all. And we have been exporting the same oil to European and other nations. So the current implications of the European Union as well as the US making the sanctions on Russia, that's going to have direct impact on Indian refineries right now. But these are the geopolitical issues that are going to have some kind of impact in the medium to short term. But we need to see if there are any kind of negotiations that may improve in these region, especially between US and Russia. Okay, that can be some kind of a positive impact, but by and large, it's going to impact the earnings of these Indian refineries in the medium to short term. But we need to see how these trade deals are going to progress in the next coming weeks. But by and large, in a medium to short term, it's going to have impact on the refineries in India.
All right. So, of course, there is likely to be an impact on refineries in India, but India is also contesting these sanctions. And India's sort of, the whole purpose of India importing cheap Russian oil, and this is something that the External Affairs Minister had said and has been saying for the last 3 years, ever since the start of the Russia-Ukraine war, is to secure its own energy needs. And the fact that Europe's problem are Europe's problem and not India's problem. Do you think there's going to be some softening of that narrative now, given the fact that these sanctions are likely to hit India's oil exporters like Reliance and Naira?
Absolutely, Karthik. As a second largest consumer of oil in the world, an importer, second largest importer of the oil in the world, we have every right to procure oil across all the oil producing nations in the world. But now the sanctions are coming from the European region. Of course, European region do import a lot of gas from Russia. That's going to have impact on them. At the same point of time, right now, the US is the major oil exporter, and it's turned to be one of the key exporting country in terms of the energy resource are concerned. India can also import from gas from US at this point of time. So right now, the major key is played by US at this point of time to increase their prominence in terms of the oil exports are concerned. That's where the medium to short-term outlook looks a little bit murky at this point of time. But we need to see how things are going to pan out. India, one of the strong importer of oils, they try to get the deals wherever the best price is available. We have every right. But as for the refiners are concerned, they have to export. That's where the key math plays in this entire story.
Absolutely right about that, Kranthi Bathini. I also want to draw your attention to IT stocks. Again, we are seeing that there has been obviously some gloom which is spilling over given what is happening in the US, given inflation fears, interest rate concerns, whether or not Fed Chair Jerome Powell end of this month is going to cut those interest rates. But overall, the IT story continues to be gloomy. Let's look at the results which have been announced so far. TCS, if you remember, had reported a 3.3% reduction in constant currency revenue. Now, that is a major decline for a stock like TCS. HCL Tech has also reported a consolidation PAT which has slipped 10% year on year. Meanwhile, Infosys results are expected 2 days from now on July 23rd. But overall, the IT story is looking gloomy. Wipro is down about 2% or so in trade. And overall, nothing really positive for the IT stocks. What's really going on in the IT stocks and how long is this fear going to continue, Kranthi?
Yeah, Karthik, we have been discussing on IT stocks. The bellwether company TCS started with a very lukewarm kind of a response. They could not able to gauge the margin guidance also. But what it seems to be is till the time the US trade negotiations don't get concluded, and also the US companies have to increase their budgets. That's where the overhang on all the major IT companies, especially the services companies in India, are concerned. And what we can sense at this point of time is the US companies, when we interact with any US importing vendor, uh, there is a lot of uncertainty. They are not clear how things are going to emerge in the next 3 months. That's where the overhang right now for the IT companies at this point of time. So this short-term overhang is going to play on all these IT companies at least for next couple of quarters, and most probably we can expect some kind of a positive momentum in 26. Right now, the discretionary budgets are not at all going up with respect to IT companies are concerned, and thank God there are no billing issues at this point of time. But the major deal wins are not coming for IT companies at this point of time. So IT might be in a consolidation phase for medium to short term.
Right, consolidation phase for IT stocks likely to continue. The word coming in from Kranthi Bathini. Kranthi, also let's pull in other stocks which are in focus this morning. Again, given that we are right in the middle of earnings season. Remember, we told you Reliance Industries did announce its results after markets closed on Friday. That was the 18th of July. Meanwhile, Zomato parent Eternal is to announce its results today. Ultratech Cement is also due to announce its results today, that's the 21st of July, followed by Paytm, 197 Communication tomorrow, and Infosys on the 23rd of July. Let's just focus on the two companies which are due to announce their results today. Eternal, Zomato parent, what is your reading of what's going on with Eternal? Given all that we've been hearing, Kranthi, about Zomato's expansion or Eternal's expansion, apart from just food delivery and quick commerce delivery to now air services delivery as well, what is the kind of guidance that one should expect from Eternal as it announces its results today?
I think what market looks forward from, especially from Eternal, is the profitability. Okay, if the profitable parameters are going up, then it can be the positive for the company. By and large, markets are right now watching for the profitability and the margins for Eternal at this point of time. Of course, any expansion in terms of the margin can be a positive for Eternal. We also cross our fingers because the stocks are tend to be volatile, and the business also very volatile, which operates with a very thinner margin. So the profitability is the key for these companies right now for this quarter. But these are all the new age companies and new a very strong disruptive business models. So how these businesses are going to thrive in the next couple of quarters is extremely important. Right now, market is looking for profitability for Eternal.
All right. Looking for profitability is the opinion coming in on Eternal, the parent of Zomato. Meanwhile, Ultratech Cement, of course, cement stocks have been sort of already consolidated given that there are two main players and it's almost moving towards a duopoly. And finally, now, of course, we also heard this morning Ambuja Cement and Adani Cementation are also, they've been given the green light by NCLT to go ahead and merge. So, Ultratech Cement likely to announce its results today. Markets are looking at some sort of a build-up of good anticipation, and we are seeing some buying activity this morning. The stock is up about 0.7% or so right now as we speak. What are your expectations from the cement sector, Kranthi, and specifically Ultratech Cement on what is likely to announce by way of not just earnings but also guidance for the year ahead?
Yeah, Karthik, we're mildly bullish with respect to the cement as a sector is concerned. What we have witnessed is consolidation in this sector, and the dominant players are going to play their key role in terms of the pricing of the cement is concerned. And also, look at the infrastructure theme that is emerging in India that's going to play a key role with respect to cement prices are concerned. So investor with a definitely with a long-term horizon, at least with a time horizon of 3 to 5 years, any dip in the names like Ultratech Cement and all, one can accumulate for a medium to longer term perspective. The trajectory for the cement companies going to be in a positive territory going ahead.
Positive territory going ahead. Meanwhile, let's look back once again at Reliance Industries, which is now down about 2.5% or so in trade already, given, of course, the fact that there is threat on the company's earnings as far as its exports to EU are concerned. Meanwhile, Reliance Industries shares, which were supposed to consolidate and supposed to go in a higher territory as per analyst expectations as of last week after announcement of its results, are now seeming under pressure. Any word for investors who are looking at Reliance Industries? What kind of a target should they now be setting for themselves, Kranthi, given the fact that we don't know how successfully India will be able to evade these fresh sanctions which are being imposed by EU?
Karthik, on a longer term perspective, the OTC business, oil to chemical business is concerned, the dependence upon, of course, it is the key major driver for Reliance Industries. The GRM's gross refining margins are extremely crucial. But if we evaluate Reliance Industries as a sum of the parts business is concerned, still there is a lot of immense value. Of course, this is the company with the highest market capitalization in India, and the sum of the parts business, the new age businesses like the gigafactories, the green energy, and the Geo. We tend to say Geo is the telecom companies, but the management always pursues Geo as the technology company, and the retail business is concerned. All these, the new cylinders of the business, they have been doing extremely good, and the gigafactories are going to deliver the results and the key revenues in the next coming quarters. So, given the kind of the setup is concerned, Reliance Industries is best positioned to take the disposable incomes, growing disposable incomes in India. And also the alternative energies, that's also going to play a key role for Reliance Industries. So any dip for a longer term investor, definitely it is a warranted buy for a longer term.
Right, a dip in Reliance, an opportunity to buy is the word coming in from Kranthi Bathini, equity strategist at Wealth Build Security. Thank you so much for your time and for joining us here on News9.